Well, thanks for coming. My name is Peter Brodnicki. I'm CEO of Mortgage Advice Bureau. Our business, if you're not familiar with it, we are a network, but because we also have a strong mortgage brand, we're also a franchise operation, so businesses trade under both operations for us. My role in the company is specifically to look at the strategy, understand what the customer's doing, what direction the customer's going in the future business models, roles of the advisor, the impact on brand and technology, how we acquire customers and retain customers. So everything is sort of focusing on the things whilst advisors and business owners are busy doing their day-to-day. We're trying to hover above that, look at the market for you, look at where it's heading, and design solutions. So what you're going to hear from me today is my own personal views. Some are very factual and things that I can share some research with you today, but they are my personal views. They're not about being right or wrong. They're just my views. You will have very different views, I'm sure, in some cases. But what I do know is that a lot of business owners, and this is what these sessions today are all about, so they've not been had like this before. We're trying to appeal to business owners of companies or people looking to grow businesses. Because when I started the business, I had to wear a hell of a lot of hats like any business owner does. And I was probably only really wanted to wear about 20% of those hats. Those are the things I was good at. The other stuff I had to do. And I can assure you, if you don't really want to do it, you're not going to be very good at it. And it also starts interfering with the things you are good at, because you're having to spread your time across all sorts of different areas. So I do appreciate how many hats business owners have to wear. Also how many hats nowadays advisors have to as well. So today is just not about my theory, it's about my experience of what I've come across, my views on what I'm seeing today and what I see the future as. As I say, if you're a business owner, fantastic, that's what the sessions are aimed at. If you're not a business owner, you're an advisor, there'll be some of the principles we'll be talking about this morning will still be very relevant to you. So first thing I wanted to share with you, as a company, I mentioned a minute ago that we look really closely at the customer, how the customer's behaving, and the customer has changed dramatically. Whilst we've all been trying to get through a recession and struggling to survive, the customer, especially through technology, has been changing how they make decisions, how they research, who they choose. And so we constantly do research, independent research, not just with our own customers, to see what they're doing and how they're behaving. Because in my experience, the most successful businesses out there are those that completely mirror what the customer is doing and behaving and responding to those things. Not responding to their own personal views, because actually every advisor and business owner is one individual, just like one of your customers is. But that's just one individual's view. And actually to run in my, one of the biggest lessons I've learned is not just to do what I think is right, is actually to understand what the customer is all about and what decisions they're making, what's important to them, and mirror them. And the more I mirror that, the more successful my business will be. And rather than manage my business on KPIs and figures, I manage it around the customer experience, and then all the other stuff will follow. And it's actually a far easier way of building the culture. It took a bit of time for me to realise that, but that's what I found. So I've headed this slide, what your customers feel is most important. It's out of the research, the things that the customer doesn't make their entire decision on any one of these things, but they do believe all of these things have a relevance, and they are starting to make more and more of their decisions based on this. So if you've won awards, and we work very hard to win awards, we're not bad at it, but people like that, they're reassured, and 59% of people, and this is a national survey, we constantly update, are impressed by awards. They want to see that, they're encouraged by it. Is your website, is your shop window, they start researching sometimes on their mortgage 2 years before they come and see a broker. And so that experience online is really important. And if you've got a website that fits nicely on a screen this big in your home or in your office, but then someone tries to look at it on an iPad or an iPhone and it shrinks, the same thing is completely shrinks, it's unworkable, you can't use it. I'll have to talk about James Prosser, who organises this event. He's done exactly the same thing on his website. You need a responsive website. It's completely redesigned depending on how you're viewing it. So it's a really good customer experience, because more and more customers are just switching off you if they're finding it hard to access you and research what they want through you, and before they even then get to see you. Customer testimonials, again, really, really important. They are, typically when I started as an advisor, yes, I had thank you cardboards up and try to buy a few bottles of something so people would buy those for me too. But now it's online testimonials. Really far more important, because the ones in your office will only seen by the people that walk in. Online testimonials, there's 3 or 4 or 5 ways of doing that. will have massive impact as you start building them up. So as customers get happy with what you do, make sure, when we talk about social media in a moment, have a look at making sure they are online. Not every business can be large and national, but people do get some comfort from that. They like to see you in the national press. That's not possible for a majority of smaller local businesses. They want to see you on the first page of Google, ideally right at the top of Google, first page. And they do want to see you active on social media, and especially in this part of the country. I mean, we're talking about 33% nationally, but when you looked at London and the South East and first-time buyers, it was nearly 60%. So people will make those sort of decisions very, very early on the process. So they'll be judging businesses and quality businesses by the way they do their research and get informed through social media and online. And that is increasing dramatically. And I'm finding, certainly in our sector, not many businesses are on top of that. Because actually, personally, you might not believe in it. But what I've tended to find, it's not about what you believe. I get enough emails, never mind Twitter and everything else. I haven't got time to look at it all. But the point is, in business, we have to have it. Because if that many customers are influenced in those different areas, every time you don't have one of those things, you will start losing a customer. And if I look at how customers made a decision, I don't know, 15 years ago, 10 years ago, 15 years ago, there wasn't the technology access for information in the same way it is now, and where it was a lot more difficult to access. However, and most of the decision-making process is about the advisor, the direct salesman, the home service salesman. It was about the advisor, about the relationship. Now, you're finding it from it being 90% about the advisor, it's probably 50% about the referencing those customers do on you and the company you work for before they meet you, whether they found you online or not, or after they've met you. So suddenly, the role of the advisor, although still hugely important, isn't the only decision-making process. And that picture is very different to 5 years ago, and it will continue to move in that direction over the next 5 years. So I'm not saying the advisor's role will become less important, but you've got to understand there are other things the customer is making the decisions about. So to me, I'm trying to build our business and help our ARs build their business on facts rather than emotion and what we've always done. And that way we'll make sure we're staying ahead of the game and we're not excluding ourselves from any particular customer group. Okay, the next thing I find in business, I'll just get rid of all that, there you go, is that when I speak to some business owners, I go, what is your customer experience? Why would a customer come to you? What would they expect to see from your business? Why is it different to anybody else? Do you know what your customer experience is? When you interview an advisor for your business, is it absolutely crystal clear to that advisor why they're joining you, how they expect to operate, what you expect that customer to see? This is how we do things in this company. Or are the brokers that are joining you, yeah, they look like a good advisor, they've got a good track record, so they'll come and join my company and they'll just continue doing whatever they did before because that was successful. I'm not saying that's not important, but in your own business, what is it you're trying to get over? What is the customer experience? What do you want them to receive pre-sale, pre-point of sale? What's the point of sale experience going to be like? So if you look at the point of sale experience, the customer for maybe a few months or even a few years is researching you online, searching on the internet, using social media, and then they come to you and you'll sit in front of a computer or you get out a notepad and you start writing down information. The experience they've had, the very slick experience they've had up to that point, suddenly grinds to a halt. Because actually customers don't trust anymore getting a pen and paper out. They've been used to using technology up to that point and suddenly we stop. But the problem we've got is that technology up to this point, at point of sale, has been about filling in paperwork, submitting paperwork and getting clients approved. It's not been engaging technology of the consumer. The customer is engaged in technology up to that point, but when they come to you, they don't. Because it's a means to an end of submitting an application form. So firms have to start building, whether it's networks or anybody else, proper engaging technology for consumers that continue that experience they've had before they join you within that. It's still about you and them and face-to-face or even telephone, but it's got to be about the customer experience and using technology effectively. And when you do take on that advisor in the first instance and you speak to them at that interview and they're very clear, this is how we do things. Because if you go to any business, if you've got 10 advisors, for example, or 5 advisors, or 100 advisors, and some of them charge fees in 100%, for example, cases. Some of them don't charge any fees. Some do it in 50% of cases. One advisor's got a 20% life penetration rate. The other one's got an 80% life penetration rate. How on earth is that a consistent customer experience? because the results in your business are telling you that. That means every advisor is taking little bits of what they believe in personally and what they want to do and carrying out that process of the customer. So what you want that customer to receive is not consistent from one advisor to another. I'm not saying it's an easy thing to resolve, but if you're going to do it, you've got to do it right at the very first point. When you interview somebody and you share that vision, you tell them this is how it's done in our company. And if you do it this way and you add all the skills you've already got as an advisor, you're going to earn far more money than you ever did before. And the customer's going to have a far better outcome than ever had before. So consistency is really, really important. And it's also what makes you money. Because you know, if you have that variance in advisor performance. So in this example, we've got a business that has got 4 advisors. The first advisor is doing everything exactly as the business owner stipulated at the outset, at the interview. They knew what they were coming into. They absolutely wanted to join on that basis. They really wanted to belong to something. They thought it was different. It was inspirational. And they deliver and follow it to the letter. The second advisor comes on, not doing so well. He's doing 75%, still pretty good. But if you're looking at that big circle, the customer experience, outcome, and profit is starting to become less consistent and starting to fall. And then what happens? In your business, you've then got another advisor that's 50%, another one 25%. And look how it's affecting all those 3 key areas. And that's exactly what's happening. The customer experience is not consistent. It's not great. It's, the outcome for the customer can't be great. One of your biggest skills as an advisor isn't as a mortgage advisor. It's about protection, for example, and being able to identify to a customer that there is a need for it and what would happen as a consequence. Those are real skill sets. And if you actually think on the subject of protection, if you're a consumer at the moment and you wanted to look about life assurance or critical illness or income protection, where would you go? Where would you go to get that advice? You can shop on stuff online, but who's going to tell you it's important? Who's going to explain to you why it's important? So the only chance you've actually got of ever finding out in a vast majority of cases is if you go and get a mortgage and you come across an advisor who's as passionate about protection as they should be and make the effort to make you aware of what's required. Apart from that, how on earth do you get to find out how you can protect your family, your business and everything else? You don't know. There is nowhere to go. So the mortgage is the biggest single opportunity to do that. When you look at the whole consistency element, that's another thing I wanted to get across today. Consistency is really, really important in business. And make it clear from the beginning, when the advisor actually joins you, do a proper induction, not just a network induction to tick the boxes. What does an advisor need to do and get prepared for before they start doing business? And the other thing in business is if you don't check what people do, they won't do it. It's as simple as that. I work on exactly the same basis, always have done. So that's what's really, really important. And as business owners, have you got time? You're also selling. How many hats are you wearing? That advisor's just joined. You're going to go and observe a sale, or you're going to get a mystery shop. How do you know what they're saying? How do you know? You know, I was in a room the other day with some business owners. There was 12 in total. And I said, right, put your hands up if you've seen any of your advisors do a sale in the last 6 months. Yeah? Nobody. All right? In the last 12 months? Nobody. And I gave up after 2 years. Nobody. So you're running businesses, you're taking on all these advisors, you don't know what they're saying at point of sale. And I know what they're saying because we do mystery shops, not from a compliance perspective, but to help business owners understand that these things, they'll be appalled at what they see sometimes and the shortcuts that are taken and the massive difference between one first appointment and somebody else's first appointment. How can that be a good customer experience? But it's down to you as a business owner. And in my experience, it's better having 5 really good advisors doing 20 grand a month than trying to struggle to get 10 people doing 10K a month and in an inconsistent way that's not adding value to your business and actually isn't that profitable. And the more your people do, the more likely they're going to stay. The more your customers are going to recommend you. It's a vicious circle. But I think we all get stuck in this trap, and I've done it before, where suddenly we're getting busy, we need to find advisors. God, we can't find enough of them. That will do, and they're okay. But we're trying to build a business. We're trying to be different in the 5 years' time than we were 5 years ago. Why would someone buy my business? I always do that. I always look at growing my business, doesn't matter how small or big it might be, and consider why would someone buy my business. I'm going to grow my business now, look at what a buyer would look at, and in 5 years' time, I want to make that business so good that someone's going to come and buy it and not just think when I walk away it crumbles. There's something rare of value. It's a great discipline. Even if you never sell your business, it's a fantastic discipline to have. So when we talk about what the next 10 years are like, because I believe the next 10 years or the next 5 years, things will change in terms of your customers and how they respond to you will change tenfold in the way they've done in the last 10 years. And many business models haven't really changed in the last 10 years, and they haven't really noticed it too much because in the last couple of years, we've started to see mortgage lending go up to 200 billion. It'll probably continue to maybe 250 billion. We've seen market share in terms of brokers and lenders go from its low in 2008 of 35%, now up to pretty much 60% and still heading north. Where will it end up? Probably 65% plus. So the issues underneath that are being disguised because we're all busy. But today is all about building a business and growing a business, not about being busy. And apologies for that if that's the angle I'm taking. So this is a very, very simple graph. I like simple graphs. On the left-hand side, 0 to 100, 0 being you're rubbish, 100 is you're very good. On the left at the bottom, that was 1 year and 10 years, depending on how long you've been running your business. And these are very simple graphs, not too scientific, but just giving you an indication of, in our sector, for mortgage and protection advisors, what has changed and how's it going to change moving forward if customers are changing significantly. So life penetration, for example, hasn't done an awful lot. If you look at general life sales, they picked up a little bit when the market crashed, but nowhere near as much as they should have done, considering how much business volumes had fallen. And they're starting to drop off a little bit now. Everybody's busy doing mortgages. But overall, pretty unspectacular. And within here, you've got massive differences from somebody doing 0 to someone doing 80%. Again, huge inconsistencies, but to get to a pretty unspectacular level in terms of how much we've developed as an industry, when it's the only area that's not affected in terms of the economy, the mortgage market, or anything else. The opportunity is huge. General insurance, pretty much the same, although it's been falling back in our sector for a long period, including the downturn. And yet, it's a great income stream. But you have to understand the product. You need to sell its benefits. And I think by the time a lot of brokers do sell it, they sell on cost. And they've sold a lot of other things. Fees have become a lot more important to brokers in recent years. They become more of a priority. But again, general insurance has become more and more a specialist role, and I'll talk about specialisation in a moment. Hey, a positive graph. The one thing that if anybody wasn't doing it in year one, we're probably as an industry about, I'm being probably a bit optimistic there, 50% as effective as we could be in terms of fee charging. So everybody's starting to charge fees now in some way, or not say everybody, most people are. Either an application fee, or an application and completion fee, or a fee on offer of the mortgage offer. But what tends to happen, as I talked about consistency, within a business, some do and some don't, and there's no reason for that whatsoever. But there's still a lot more that can be charged. You know, the role of the mortgage advisor now and the number of hats they've got to wear and what's involved is far more detailed than it's ever been. The lenders are starting to realise what great value, if they hadn't done before, an intermediary is. Because they're now having to manage regulated distribution in their own right. So overall, you know, client fees should be going up, but they should be going up further and being more consistent. Okay, talking about brand and trading style. It always makes me laugh on Dragon's Den when people go on there selling this new business and they go, so tell me why it's worth, you valued it at £5 million and I should buy 5% of it for God knows how much. And they go, well, it's got a great brand. I said, well, it's not got a great brand. It hasn't even started trading yet. So they've come up with a great name, and they think that's a great brand. That's not a brand. So a lot of businesses think they've got a brand. They haven't got a brand. There's only 1 or 2 or 3 brands, major brands, maybe a few more than that, in the UK in the mortgage sector. The rest are trading styles or company names, because a brand requires a huge amount of investment. It means it needs a consistent customer experience throughout. There's a lot of things a brand requires. However, trend-wise, over the last 10 years, if you started trading as ABC Mortgages, the likelihood is your name is known a bit more than it was 10 years ago. Mostly by your existing customers and recommendations. Depends what high street position you've got. But it's not up there because most of your day-to-day activity and money is generally spent on running the business and not investing in that. And it's an area of expertise, which is a bottomless pit. Anyway, I put it in there just to try and understand where businesses might want to try and get to in the next 5 or 10 years. Then one of my favourite subjects, and here's an opinion that you might disagree with. I don't believe client servicing exists in our market. I think it died years ago. It died out with direct sales forces trained by insurance companies. It died out with the home service. And if I look at what client servicing is now, and if you look at some of the stats the lenders give you, in terms of customers going back to original brokers. If you look how brokers move companies maybe more than they did before, how companies are better at holding on to that client when the broker moves, but not better at servicing when they do. There is no servicing out there. And the best person I've seen at servicing does a remortgage call 3 months before the product expires. And I can assure you now that that conversion rate of that top advisor who does everything textbook on every single mortgage, the conversion rate will start to drop because the customer is starting to expect more. They're starting to be wanting to be engaged far more than that. And you calling them out of the blue, maybe in 4 or 5 years' time, because people maybe were looking to take longer fixed rates, and then suddenly taking an interest in that client at that point when lots of other firms and organisations are far more sophisticated in their communication strategy, that isn't going to work so well. And don't expect to get that same conversion rate. And of course, in our industry, remortgaging tends to be when we've got time. And I can assure you now, as we're getting busier and there's a shortage of advisors, even though there's an opportunity coming up as rates go up, I don't think that the remortgage opportunity will be seized anywhere near the opportunity that's there. You need specialisation in terms of that. Maybe it's a telephone type job, somebody specifically in your business. But you also need to engage with that customer on things other than mortgages. There's nothing else to talk to them otherwise. It's a bit like an estate agent saying, well, what are you going to keep in touch with somebody about? I've got to wait till they sell a house. It's becoming more sophisticated. And all the time and effort goes into generating what I call business A without focusing on business B. And business B should be growing like that year on year. The mortgage market does that. Housing market does that. Mortgage brokers do that. But business B, which I call your client bank, should be doing this if it's serviced properly. Okay? And it shouldn't just be remortgaging. And it never was just remortgaging, and that's why we've changed. The whole generation has changed it. And it's not very sophisticated. It's not a very consistent customer experience, as that previous slide showed. And therefore, it's not adding significant value to your business. So next thing I'm going to do is talk about, and I've touched upon it already, specialisation. This slide is just meant to be a wacky slide that shows whole loads of different things advisors have to do today compared to maybe what they had to do in the past. You know, they have to be specialists in so many different areas. You know, some of these products are core to your business, some are periphery, but they never ever become core. You've got advisors that are, you know, work out of estate agents but can't manage relationships with introducers, but they're very good advisors. There's a whole load of skills. The paperwork process, the treating customers fairly process, the best outcomes process, all these things have become more and more intense. I remember when I started as a broker, my fact find was 1 page. The only writing I had to do was my signature at the bottom, and all the rest were just tick boxes. It's changed immeasurably. And therefore, is it really feasible to believe that a single broker can do everything that you want happen in your business? And again, sometimes you're down to choices, because unless you've got scale within your business, how can you start separating out different functions within your business? One bloke has to do everything. They have to do everything on here. They have to know everything about everything on here. But they won't know it very well, because even if you look at things like protection, and these are stats because we've done everything within the business from sole tie, multi-tie, and IFA. The more you know your product, the better you are. Okay, that is an absolute fact. I'm going to show you stats across all sorts of disciplines, which I'll talk about today as well. The more you understand about the product, the better results are. So just like when I started the business, and many of you maybe did, had to wear all those hats, that's what the broker has to do. Jack of all trades, master of none. Very difficult to be really effective. So I'll give you a really good example. One of my very top advisors that came out to Nice on a conference a few days ago, he gets all his business now from recommendations. He probably banks 360, 400,000 pounds a year. When he sees a client, he protects them properly, he charges a decent fee, and he gets loads of recommendations and charges a fee to those people as well. But when he was in this workshop with other business owners the other day, he said, but how many clients, your existing clients, have you actually spoken to and called and said hello to in the last 3 years? He said, none. He's not had time to speak to any of his clients. So even that guy who I'd put top of the tree, you know, I mean, a lot of brokers hardly get any recommendations, considering what they should be getting. He is just inundated with them. And the other 2 advisors that have come into his business, he's made sure they do exactly the same thing. And exactly the same model operates. But what I'm saying is, he needs some specialisation because it's not working in his business. Existing customers aren't being contacted. They're just happy when they see them, they recommend them, and the other person's really happy and recommend them. So he's focused on that. So there's a massive opportunity within his business. Although anybody looking from the outside will go, wow, what an amazing business. So all I'm talking about is areas of specialisation. And if a broker, for example, has got a single life company to deal with, believe it or not, the life penetration rates are higher. If they go multi-tie, they're still higher. Still high, maybe not as high, and they go whole of market, they plummet because the broker doesn't know it. We've got brokers that do loads of mortgages, sell protection. They have a case that's loaded in the client. They refer it to another team who uses the same products, 4 or 5 providers they've got, and get it placed because they understand the products inside out. And so now what you're starting to find in businesses are protection-only advisors, real specialists. That's all they do. It's 100% of their focus. People that focus on bills and contents, they get passionate about the features of a bills and contents product. So the customer goes with that. How many of your advisors are ever going to be passionate about the features of a bills and contents product? You'd be lucky even to mention them. So where possible, I really do believe now we're in an industry where specialisation is absolutely key to how you build your business, and can deliver a consistent customer experience. It doesn't have to be one person doing it. The company can deliver it. The customer sees it as joined up. It could be one done face-to-face, a part done on the telephone, one could be done in Glasgow, the other one could be done in London. The customer still gets a complete customer experience. That customer will be far more valuable to you. You earn far more money in the business. The outcome will be more consistent, and your profitability will grow. But how do you do it if you're a small business and you haven't got those areas? So again, maybe we need to start looking at ways in which we're trying to do at the moment of doing that. So I talked about client servicing a moment ago and tried to reflect that top graph. That's what the market's done. Brokers have pretty much, in terms of the market, reflected that. That's what their business has done. The bottom graph shows what I call business B. The client servicing is sort of poodled around. It's been a top up because interest rates have been so low. People haven't gone back to remortgage people. What else could I possibly go and talk to people about? Well, there's loads of stuff you can talk to people about if you positioned it from the outset and the process of the relationship moving forward is established on completion. And therefore, not a lot's been done. That's what business B should look like. So when we do go through tough markets, we start having solutions. We're not exposed, and we've got customer base that if we ever wanted to sell our business, that's going to be a lot more valuable than that. Because all you're actually showing when you're selling your business is, okay, my business is completely business A. If the market goes up, I do well. When the market goes down, I don't do so well. So that you can't influence. Yeah, you can influence around the peripheries in terms of what products you're selling and the consistency and the profitability. This you can influence. But I don't believe in today's world we're ever going to get back to the level and quality and detail of client servicing than we had 15 or 20 years ago because the world's changed. So we have to reinvent it. And businesses have to reinvent their models. And I think the capacity issue of trying to bring new brokers on, if you can get people doing more specialist roles and expand their capacity, that's got to be something worth considering. I want to talk about trainees for a few minutes. The industry desperately needs trainees. We're lagging behind in terms of lending, in terms of growth in advisor numbers. It's the same old people going around the mill. If you're in a particular area and you're in Bishop Stortford and you've got to find a really good broker that's fantastic in a estate agency in Bishop Stortford, you've probably got a choice of 3. So we need to bring more people into the industry. But finding trainees is really, really difficult. And very few people do it well. And the people that do it most are people like Countrywide who've put massive budgets in it. But if you follow the same process they do, it wouldn't work for you. So for smaller businesses, without any shadow of a doubt, the easiest way to do it is someone who's excellent at admin, who takes their CMAPs where they're with you, gets to understand the job, work the job properly. However, even then, you really need to spend time looking at what their basic skill sets are rather than just saying they can move into being a trainee. But it is a low budget way of doing it because they are earning their money by being an administrator. They can phase into doing sales. And if you're only looking at a one-off trainee, that is by far the best way of doing it. However, if you do want to plan trainees, because A trainee isn't a knee-jerk reaction. I can't find anybody. I've run out of ideas. I've got to take on a trainee. Trainees don't work on that basis. If you need to then go out and recruit a trainee, there's lots of things you need to consider. Trainee is part of a long-term plan. If you know you want to have 5 more advisors or 6 more advisors over the next 2 years, and you know you're going to have to probably bring in 2 as trainees, then you plan well in advance. And the business itself has got to have the funding to do it. I mean, it will cost you far more, even if you paid a top-end £5,000 recruitment fee. I can assure you, if you go out and try and find a good trainee that isn't an administrator, and you try and put them through a process to become a seller, it will cost you more than that. Because a good trainee does require a good salary. If you're looking at university graduates or people that have got some form of track record in their performance in their lives so far, you can't pick them up for £13,000, £14,000 and expect to get a top producer. So they're not cheap. It'll also take 3 to 4 months at least to get that person, if you're doing the job properly, getting up to their full potential. The amount of work that needs to be done in assessing that individual and being very clear about not only about your customer experience I talked about earlier, but also what you expect from that broker and the skill sets and attributes you need. You need to be very clear about those and measure those very carefully and have more than one person involved in that recruitment process, because you're embarking on a long process here and a very costly one if it doesn't work. So it's got to be done on more than gut feel. If they've already got CMAP, then it works a lot better because they've made that effort already, they've made a commitment to that career, they're not just trying to go into financial services to see if it works for you. But it takes a long time. It needs a mentor, someone at a senior level that understands the business and meets with that advisor at least weekly. They need someone they can shadow and buddy, a really good advisor, somebody who does the great KPIs and follows the process perfectly so you can mold this person, someone who can provide that technical support. You can't just flung them into an estate agent somewhere remotely. You need to give them loads of leads because they need to practice. You can't give them a job out there as soon as you tick them off in terms of experience and then say, there you go, mate, work out how many leads you can get from this estate agent or this lead source. These guys need confidence and practice. So therefore, the businesses that tend to operate a trainee model better are those that have got a head office environment, can have leads that can be dealt with over the phone and sales that can be made over the phone, and that they can manage and monitor them in situ, and that they can have a look at getting them involved initially on general insurance, then on protection sales and onto mortgages. All these things, because the failure rate we looked at across the industry on trainees is massive. The number of people that leave in the first 3 to 6 months is just not worth it. So all I would say to you, I'm not going to spend a lot of time on the subject, but do look at it very carefully. I don't believe that more than 25-30% of the businesses we have under MAB have got the right structure or culture to take on a trainee. That's not a criticism of them, they're just not in that position, and therefore the chances of embarking on that journey and making it successful I think are very unlikely. Last couple of slides. This is a quote from IBM. In these new digitally advanced and demanding customers who are now deciding where the buying process starts and ends, and how all elements in the chain, market, buy, sell and services are linked. And that is very, very true. Technology now is driving everything, all the behaviours that we've seen. As I said to you earlier, most of your customers start their research very early on in the process. They use the internet and social media as part of the process. They expect you to stack up well in those areas. It's your shop window, and if your shop window isn't doing the right job, then you're going to really struggle with those customers as you move forward. So in today's customers, we need engaging technology, which I talked about. Let's try and replicate the slick, engaging process they had before they came to you and their research when they come and see you. And again, rather than pen and paper, let's try and work with the technology and engage them, but not everybody's going to have that at their disposal. So in terms of technology, it is going to drive all the change, most of the things I've talked about so far. The last slide, it's not the strongest of species that survives, nor the most intelligent, thank God for me, but the most responsive to change. And that's a quote from Charles Darwin. And again, everything I've talked about today is about change. The change will be faster than you've ever experienced it. That means the opportunity has never been greater. But also the risk of doing nothing has never been, the risk of not doing anything at all has never been greater either. So all I'll say is, like a recession you see, it comes like that, it hits you, You struggle through it, but you know there's going to be a bounce. This is a bit more subtle, but I think it's going to be less subtle than you've seen over recent years. And when it hits you, it ain't going to bounce. It's going to stay, and it's going to stay for a long time. And all I can say is, everybody's going to have to change. And I mean pretty much everybody. It's just a matter of when you do it. And it's just a lot easier to do it right from the beginning, build it into the culture of the business, try if you can, and it's not easy, focus on the customer experience, look at how the whole techniques of managing your business, is it on figures or is it on the customer, and consistency, and then I think you'll be taking your business in the right direction. Well, that's my opinion anyway. All right, thank you for your time, appreciate you attending. Thank you.